The initial public offering of Tata Technologies, a first from the Tata stable in nearly 2 decades, is set to open for subscription on November 22nd. Now, 3,042 crore worth IPO is purely an offer for sale, that is OFS of shares by parent Tata Motors and investor Alpha TC Holdings and Tata Capital Group, who would be offloading stake equivalent to 11.4%, 2.4% and 1.2% respectively. Now, the move is part of Tata Motors' deleveraging agenda. As of September 30, the company's automotive debt reduced to 38,700 crore as against a number of 41,700 crore in the previous quarter. Tata Motor wants its domestic business to be completely net debt free by FY24. Let's talk about the IPO reservation and the lot size. Well, Tata Technologies reservations, if you talk about that, the much awaited primary offering by Tata Group has reservation for as many as 5 categories. Other than qualified institutional investor, an individual investor has an option to apply under non-institutional investors, that is more than rupees 2 lakh, retail investor up to rupees 2 lakhs, and shareholders of Tata Motors and eligible employees of Tata Technologies. An eligible employee who holds some shares of Tata Motors can apply under 3 categories: A, as an employee, B, as a shareholder of Tata Motors, and as a retail third or non-institutional investor. However, employees can get an allotment of maximum shares worth around 5 lakh as mentioned in the RHP of the company. Investors can get in a minimum of 30 equity shares and multiple of 300 after that. Let's get to know more about the companies. Well, the Tata Motors subsidiary Tata Technology is a global engineering services company offering product development and digital solution, including turnkey solution, to global original equipment manufacturers (OEM) and the tier 1 suppliers. Tata Tech is a pure play manufacturing focused engineering, research and development, that is ER&D company with expertise in automotive industry and leverages that expertise to serve clients in adjacent industries such as aerospace, transportation and construction heavy machinery. Well, the company's education business too provides a solution to public sector institution and private institution and enterprises through curriculum development and competency center offering through I Get It platform. Now, let's also talk about the financial profile of the company. Well, in terms of offering, first, Tata Technologies core services includes engineering, research and development, as I mentioned earlier, digital enterprises services DES, third is education offering, product and value added reselling, that is VAR. Now, Jaguar Land Rover and Airbus SE are among some of its clients. JLR recently expanded its partnership with Tata Technologies for its digital transformation. Let's talk about financials. Now, the company reported 42% year-on-year growth in consolidated net profit at 624 crore for the year ended March 2023 and a 25% rise in revenue from operations at 4,414 crore during the same period. In 6 months period ended September FY24, the profits have surged 36% and the revenues have increased by 34% to rupees 2,526 crore compared to the period year ago. Now, what's really different in Tata Technologies versus some of the similar mid-cap companies and more importantly Tata Elxsi? Well, Tata Technologies has maximum on-site share and significant contribution of auto vertical to its revenue. The percent is significantly higher than all the players except for KPIT. But let's understand the basic difference from Tata Tech and the group company, that is Tata Elxsi. Tata Tech and Tata Elxsi, both companies overlap each other in the broader way under the ER&D industry but differentiate in terms of sector they generate business from. Tata Elxsi focuses on design, innovation including software development, user experience design and data analytics with clientele coming from automotive, around 40 to 45% on top line consumer goods, semiconductor, healthcare and medical devices, whereas Tata Technologies has a major focus on automotive concept services. That is 80% of its revenue in FY23, with outsourced engineering and digital transformation services to global manufacturing clients to conceive, design, develop and deliver better products, followed by value added services, that is 9 to 11% revenue in FY23, and education solutions in manufacturing skills with I Get It platform, which is around 9 to 10% revenue in FY23. In terms of growth performance, Tata Technologies revenue CAGR is higher than L&T Technology Services and Cyient, but is lower than KPIT and Tata Elxsi that you can see from the chart. Profit growth is too lower than its group company Tata Elxsi. That's the long and short when it comes to the peer group comparison. Let's talk about strengths. A couple of points there. First is the deep expertise in the automotive industry. Second is differentiated capabilities in new age automotive trends such as electric vehicles. Third is of course the clientele across anchor accounts, traditional OEMs and new energy vehicle companies. Apart from that, it's also global delivery model which enables intimate clients engagement and scalability. Now, the proprietary e-learning platform leveraging the manufacturing domain knowledge to tap into large upskilling and reskilling market also is an added advantage. Let's talk about the key concerns. Tata Technologies is exposed to continued growth in top clients, and any deterioration in the client's business may lead to slower growth coming in for this one. The top 5 clients, which includes JLR, Tata Motors, Winfist, contribute to around 57% of the company's overall revenue and 71% of service revenue in the first half of this financial year. The company was heavily dependent on anchor clients, that is Tata Motors and JLR, with a revenue mix of more than 54% in 2020. However, it has consciously diversified the client portfolio, resulting in the anchor clients mix now reducing to 46% in the first half of this financial year. Let's address the second concerns, that revenue are highly dependent on clients which are concentrated in the automotive segment. An economic slowdown or factors affecting this segment may have an adverse effect on the company's business, financial condition and the result of operation. Auto vertical contributes to around 88% to the firm's revenue from services. Let's address the third concern. Now, the company expects a significant amount of future revenue to come from new energy vehicle companies, many of whom may be startup companies. Uncertainty about their funding plans, future products, roadmap, ability to manage growth, creditworthiness or even ownership changes may adversely affect the company's business. Address the fourth one. Tata Technologies has also entered the educational business through I Get It platform to cater to public and private sector academy institution. There is a high dependency on third party for quality, delivery and commercial details in the education business. Also, it operates at a lower margin compared to that of other businesses and has been particularly exposed to fluctuation in the revenue due to the nature and frequency of projects and the payment involved in the contracts. It derives 97% of education revenue in the first half of the financial year from projects with state government and public university. Fifth point, well, the company's cash flow from operating activities for financial year 2022 and at least a 6-month period ended September 30, 2023 was negative. But an important parameter there, which is valuation. Now, Tata Technologies PE is more or less in line with L&T Technology Services, but it is at a significant discount compared to KPIT and Tata Elxsi, which thus far have enjoyed an also higher profitability over the last couple of years.